Eva from Indianapolis asks, my personal files are piling up and I'd like to purge what I can. How long do I need to keep my copies of my tax returns and other tax documents, and which ones do I need to keep?
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
Well, Eva, I know that these types of files and documents can really start to add up, but you want to make sure you have the documentation you need to support the amounts reported on your tax returns. And this is in case of an IRS examination. But there are other reasons to keep records besides an IRS examination. You'll also want to keep good records for maybe insurance purposes or if you're trying to qualify for a loan. And keeping adequate records can also help you identify sources of income or keep track of your basis and property, which becomes important when you go to sell it. You can keep your records electronically or on paper. The IRS really doesn't require you to keep your records in any particular way, just in a manner that will allow you and the IRS to determine your correct tax. An electronic storage system is a great way to store your information, but be certain to test the indexing, retrieval, and reproduction capabilities before you destroy your original documents. If the electronic system is not capable of reproducing your records in compliance with the IRS requirements, you could be subject to penalties in the case of an examination. You should also know that the IRS may test your electronic storage system, including the equipment and the software used for compliance purposes, if you are involved in an examination. The length of time you need to keep your document depends upon what it supports. For tax documents, you need to be aware of the statute of limitations for different scenarios with your tax return. This refers to the period of time in which you can amend your tax return to claim a credit or refund, or the IRS can assess additional tax. For example, if you filed a tax return and you owed additional tax, then the statute of limitations is 3 years from the date the tax return is due or when it was actually filed, whichever is later. But in order to qualify for the 3-year statute of limitation, you had to report your income and deductions correctly, because if you understate your income by 25% or more, the statute of limitations jump to 6 years. And if you filed a fraudulent tax return, there is no statute of limitation at all. You'll want to keep what the IRS calls basic records, because these prove your income and your expenses. And if you have a home or investments, your basic records should also include documents that pertain to these items as well. Basic records for your income should include W-2s, 1099s, bank statements, brokerage statements, and K-1s from your business activity. Basic records for expenses should include sales slips, invoices, receipts, canceled checks, and written communication from qualified charities. And the documentation you need to keep for your home ownership would include your closing paperwork, your purchase and sales invoices, proof of payment, insurance records, and receipts for improvement costs as well. You'll also want to keep brokerage statements and mutual fund statements, 1099s, and Form 2439, which is a notice to a shareholder of undistributed long-term capital gains. A comprehensive list of what you should keep and for how long can be found when you visit my website at www.actservices-inc.com on the Biz TV page. There you'll find information on this and other tax topics. Thank you for your question, Eva. I hope that helps.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.